Okay, thank you. I will start by saying, what is future trading? Future trading is a type of trading that allows a trader to trade markets, a volatile market at that, that helps you or ensures you sell or buy a particular asset at a set price in the future. Future trading can be defined as a type of trading that allows or ensures a trader to trade against markets, whereby a volatile market is say, whereby purchasing or selling, purchase means to buy, or selling an asset, crypto to say, at a set price in the future. You can sell and you can buy. It simply means determine what the price of an asset could be in the future. Determine what a price of an asset could be in the future. A volatile market to say. Now, we have two types of future trading, or two types of leverages. But before we go into that, I will give you some certain rules that you must go on when trading future in crypto. Let's go on. There are some personal quotes that I have myself. Which I always introduce to all my students before they can journey on in future trading. Get your pen and paper, your writing materials, as I will be dishing them out to you. Just give me some.
Please, your voice is low.
My voice is low. Can you hear me clearly now?
Yes, sir.
Okay. Future trading personal rules that you have to take home and have them at the back of your memory. 1, don't enter a trade or financial institution when you are emotionally drained, when you are emotionally down, when someone offended you or gets you angry, or you are not well organized. Whenever you are emotionally down, whenever you are emotionally drained, don't enter future markets. 1, don't enter future markets with 100% eagerness of making money. You may end up losing to the market. That is 2. 3, don't trade future with greediness. Have the attitude of content. Always try to be contented with whatsoever profit you've made in the future trading in the market. 4, don't enter markets when you are mentally down. It is very dangerous. It is very, very dangerous. 5, you must go to the future market with a signal or a well-known analysis. You don't just enter future trading and pick any trade anyhow. No, it is a must that you go into future market with a signal or a well-known analysis, because any resistance broken may likely become support in uptrend markets, and any support broken may likely become resistant in downtrend markets. 6. Always be time conscious when entering the market. Always be time conscious. 7. Always apply stop loss where and when needed. Apply stop loss where and when needed. It is very important. Don't always go to market with all your capital, just like with taught capital management. Don't go to the market with all your capital. That is number 8. Number 9, you may have to develop self-discipline and strategies when trading futures. You may have to develop self-discipline and strategies when trading futures. 10. Make sure that you are learning new things every time you enter the market from your losses and successes. Like every adventures, every activities, every of your movements in future markets should be a lesson to you. That is number 10. I will add also, which will be number 11. Don't always have it in mind, or don't try to win back any money lost in haste in future market. Example, maybe you enter the market and for instance, you lose. You should calm down. Don't be in haste to chase profit in order to recover your loss at instant. It is very dangerous because you may end up losing all. Number 12, don't chase the candle. Don't chase a trade. Don't chase a profit. Number 12, don't chase the candle. Don't chase a trade. Don't chase a profit. 13, make sure that your entries are well accurate. Make sure that your entries are well accurate. Whenever you miss any entry, don't be too eager to FOMO into such entry. It's also the same thing as don't chase a trade. So thank you as you have written down all these things, because I will still ask you all of them from number 1 to 13. Let's go on. I believe that you all write down these rules because they are very, very important. Now, like I said before, that you have to fund your Binance or KuCoin, and I believe that you have all done that. I'll be dishing into practical right away. I'm with you guys. I'm trying to do some setups. Okay. Now I have just started sharing my screen. Can you all see my screen? If you can see my screen, say yes, sir.
Yes, sir.
Can you all see my screen?
Yes, you can see your screen.
Okay. Can you still see my screen? No, I guess. Can you still see my screen?
No, we don't see it, coach.
Okay, now we get down to Binance. I'm opening my Binance. Now I am not having I want to deposit from Trust Wallet to Binance right away. Wow, Citron is pumping, like seriously. I want to deposit from Trust Wallet down to Binance. Okay, now I'll just click wallet, click spot, click deposit. I will select the coin that I want to deposit, BNB. I will choose the network, BEP20 Smart Chain. Then I will copy the address and I will go down to my Trust Wallet. I'll have to unlock my Trust Wallet and I will click on BNB. I want to deposit BNB of $50 and I will click send. I will paste my wallet and I will change to USD. Then I will type in $50. Or let me say $51. I'll type in $51. Or let me say $52. I'll type in $52. I'll press continue. I'll click on confirm. Boom. I've just sent it to Binance. I have to refresh it, refresh it. Now it has gone through. You can track it in case if it's delaying. So just have to go back. Go back to Binance. This is Binance. I have to wait for my coin to arrive. My coin is on its way coming. Wait for my coin to arrive. It's yet to come. My coin is yet to arrive. It's on its way coming. It's on its way coming. So while we are waiting for the coin, let's be doing something. Like this is trade. This is your trading portal. This trading portal consists of spot trading. Spot trading can also be defined as a type of trade whereby you'll be holding an asset as a form of investment. Spot trading and future trading. Future trading is a type of trade that works as an instant trade, while spot trading can work as an investment, just like our explanation yesterday. When you are buying on spot trade, you are buying on spot trade with the knowledge of having an asset, held up somewhere, Why future trading is a type of trade that you make to acquire instant profit, and it is full-time volatile. So this is your portal of spot trading. Here we have buy, we have sell, we have limits, we have market order, we have stop limits, we have OCO, one time occur trade. Then we have what we call percentage. This percentage simply means selecting by percentage the amount in which you want to use in making your trade. We have available, it means the available assets that you may want to trade. And all this place is your ask and bid on market movements. The red is the ask, is the bid, while the green is the asking price and the bidding price. Here is a short form of where you can check the charts of that asset that you are about to trade. So here are where you can check your trade history. If you have open trade here, it's going to display here. This is your order history. This is your general trade history. These are my trade history. Is endless. These are the type of trading I've made on spot. Is endless. Okay. Now let's go back again to check our BNB. Boom, our BNB is here. You can see I sent $52, but I am having $51.8 here because it is a volatile market. Maybe at the process of sending and receiving, the price of BNB has actually gone down. So that is why I am having this amount. It can as well go up at any time. Now, let's go back to our trade. We want to practice spot trading before we go to future trade. Like I said before, this is your spot trading. Now, what we are having here is GMT/BUSD. What this actually means is you are trading BUSD against GMT. Simply means you want to use BUSD to buy GMT. Now, but you can see here, I am not having BUSD. So BUSD is not going to appear here, as you can see. But if I switch here, it means I want to use GMT. I want to sell GMT against BUSD. You can see I have 15.4 GMT. That is why GMT appeared here. Let's say, for example, that I want to sell GMT now, of which I don't want to sell. I'll just type in the amount of GMT that I will be selling. But now we are not trading GMT because I don't want to trade it. Not that I'm not having it. What we want to trade is BMB. You go to BMB, you type in BMB here, BMB. BNB is going to appear. Now I want to trade BNB against USDT. I'll click on BNB/USDT. Boom. It has appeared here. Right now, you can see I am having 0.13C BNB, 0.136 BNB. That is the amount of BNB I'm having. But I'm not having USDT. So now we want to sell. Because having USDT, we want to sell BNB in order to acquire USDT. I will click sell. Now, limit order are type of order. Taught all this thing by revision to theoretical aspects and kind of normal training when it comes to practical aspects. You've been taught all this thing. Limit trade are type of trade that you place when you want to determine price by yourself. Limit trade are type of trade placing when you are giving price by yourself. When you are giving price to the market by yourself, you determine the price that you want to sell. Why market order are type of order of instant execution when the market itself determines price of which you should place your trade. When the market itself determines price of which you should place your trade. That is market order. And using market order, you pay more fee because the market determines at which price you should be buying and not you yourself. Why in limit order, you pay lesser fee because you determine the price at which you should be buying and not market. Now let's use limit order. I want this BNB to sell at 382. So what am I saying? I am setting this order that my BNB should be sold whenever BNB price gets to $382 per BNB. Now I will input the amount of which I want to sell. Let's say I want to sell $10. I want to sell $10. Is 0.136 BNB, which is equivalent to about $51.8 or $52 ultimately. So out of this amount, want to sell I have here, I've input price BNB of which I want my order to be. So whenever the price to 382, this is going to sell. So the total amount of BNB at this price is 0.026. 1.1 BNB what I want to sell. Total BNB at this $10.1 USDT is 0.026. So I'll just place my order sell. And why they are writing this is because they are going to take their charges from that 10.1, of which their charges is about 1%. So now I will have to increase my 10.5. 13 price $5. I'll just click sell. It's selling. Hello, can you see my screen?
Yes, we've seen the screen,
Hello.
but
Why
No,
are
I
you
can't
not
see your
saying
screen now. Oh,
anything?
yes,
These
I
guys
can.
are not
Yes,
saying
coach.
anything.
Now I
We
can
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 you
see.
see
see
your
my
screen.
screen?
Now we can.
Yes.
We can see
So
your
where
screen
did
now.
we stop? Where did we stop? So I placed a sell order of 10.5 USDT, which is around 0.027 BNB. So I use limit order. Like I said, limit order simply means to determine or to give price, giving price to the market. So I have given price of which I want my assets to be sold to the market. The price I've given was 382. You can see 382 here. So I want to sell 0.027 BNB at the price of $382 per 1 BNB. So whenever the price gets to this 382, price of 1 BNB, my order is going to be executed automatically and I will have my USDT. So that is why you can see it at open orders. Open orders. So now let's go and use market order. Market order, like I said, simply means instant execution following the current market order. Now, I still want to sell more 10.5 dollar, $10.5 USDT. That is what I want to sell. And you can also click by percentage. If I put percentage, 25% of my total available balance, that is 10.3. Then I'll just click sell. It's going to sell automatically. It has sell. You can see that is sell. When you come here now, you know I wasn't having USDT, but now I have 10.4 USDT because I have actually sold part of my BNB to USDT. Now we want to buy the same thing with buying. Now we want to buy. What do we have to buy now? Let's buy GMT. GMT at market order. Now I want to buy GMT. I want to buy GMT at limit order. Let's say I want this my GMT to be bought at 2.3. Whenever GMT go to 2.3, this order will be executed. And I want to use my total capital, which is 100%. I will just place my order buy. So whenever the price of GMT gets to 2 point, oh, that is a mistake. So I want to buy GMT at 2.3 and I want to use my total capital. So whenever the price of GMT gets down to 2.3, this order is going to be executed because I am buying. So I place my limit order below the market price. Whenever you are buying, you place your limit order. Whenever you are buying using limit order, you should place your buying price below the market price because you are buying. And whenever you are selling using limit order, you should also place your buying price above market price because you want to sell, and of course you want to make profits. So now let's sell more of our BNB so that we can get enough capital for future trading. I want to sell more of my BNB and but I wanted it at close market order. Now what do I have to do? I just type 81.2. So now I want to tell 10.5 again. I want to sell at 81.2. I want to sell 10.5. So that is it. Sell. You see, this is limit order, but I place it closer to market order. Let's watch it executed. You are watching it. Remember that all these things are spot trading. It's coming. The order is yet to be filled up. Once the price of BNB gets to around 381.2124, this order is going to get filled up immediately. Because the asking price is lower to what I said. So what people are asking is lower to what I said. It's until the asking price is above my order, my limit order, then my trade is going to be executed automatically. So now let's sell again using market order. I want to sell again. I want to sell 10.2. So boom, sell, successful. So now I have just sold. So now we have practiced both buying and selling. Now we will move down to future trading. So before you can trade in future trading, like I explained transfer to you 2 days ago, you must transfer from your spot wallet to your future wallet before you could trade. Now we want to transfer. You just come to your wallet, tap on transfer. You can only transfer from spot wallet to any of the available wallets. And you can only transfer from any of the available wallets to Trust Wallet. You cannot transfer from any of the available wallets to other available wallets. What do I mean? You have wallet accounts here. I explained all these things to you. You have cross margin, USD margin future, coin margin future, funding wallet, isolated wallet. All these wallets you can transfer from spot wallet to any of these wallets, and you can also transfer from any of these wallet accounts to your spot wallet. But you cannot transfer from cross margin to isolated margin, and you cannot transfer from funding wallet to coin margin wallet. And so you cannot as well transfer from USD margin wallet to coin margin future. So now You want to transfer from spot to USD future margin wallet. And the asset you want to transfer is USDT. So you tap on USDT. So now we have 20 USDT. Do you know why it's 20? We were supposed to be having 10. But that our awaiting order to sell BNB at 381.2 has been executed. That is why we now have $20 USDT. Now let's go and check it. You tap here. We come to open order. We have open order to buy GMT at 2.3. Then we have another open order to sell BNB at 382. Now go to order history. This is our order history. We just sold BNB at the market price of, you see, market price of 381.1, and the order got filled. We sold 0.026 BNB and the order got filled. We also sold 0.027 BNB at the rate of 381.2 BNB. You see, the order also got filled. This is the trade history. This is the amount of BNB we sold, 0.027 at 10.29, which is approximately $10.3 USDT. The same thing here. So now let's go back to our future trading. Now we are to transfer from spot wallet to future wallet, and we are to transfer USDT. Hello, are you following?
Yes, sir.
Yes, sir.
Yes, sir.
Okay.
We are following.
We are to transfer USDT. The total USDT we are having here now is $20 USDT. So if we are to transfer all this money at once, we click on maximum. But if we are to transfer it bit by bit, we can type in $10, then transfer. There is no charges for transferring. You can transfer as many times as you wish, and there's no charges for that. We have successfully transferred. Now, this is our future portal. Like I said, we have buy, we have sell. Buy is what we call long. When we are longing the market, we are longing the future. While sell is what we call short. We are shorting the market, we are shorting the future. Now, here we have so many things. Everything here have their own use cases. We have these two arrows. These two arrows simply means chart. Like we have IMX. You can from here to check the charts, the charting for IMX. Maybe you were given a trade and you need to confirm the chart. You can from there to click it. You can from here to share the chart. You can share the chart to anybody. You can share the chart to anybody from here. You can share it to Facebook, Telegram. You can share it to WhatsApp, sender, email, anywhere shareable. You can share it there. Then you go back. Let's go back. So why this one is your future, I guess your future calculator. You can calculate anything here right from here. All these places are preferences, history, your trade history. They also have chat room. You can chat with fellow Binance member to talk about that particular trade. You may see someone trading the same thing you are trading. Both of you can dialogue. This is M bonus, this is trading data and all that. All these things are just like shortcuts to something. Now, this is type of future trading. We have type of margin. We have isolated margin called and we have cross margin call. Cross margin call are type of margin that helps you on a running trade. What are cross margin? You can read. He said, what are cross and isolated margin modes? Cross margin mode are cross positions under the same margin. Under the same margin assets share the same asset cross margin balance. In the event of liquidation, your assets full margin balance along with any remaining open positions under the assets may be forfeited. What are they talking about here is this. This type of cross margin, a type of cross margin that has authority over your balance. It has authority over your balance against liquidation. What am I talking about? For example, you are having $1,000 here and you place a trade using cross margin. You place $100. You use $100 in placing a trade. And unfortunately, this trade is going bad. It simply means that they will be taking from the remaining $900 to hold on to this trade. And if luckily this trade bounce back, automatically your $900 has served as a rescue mission for your trade. Because once the trade bounce back, they are going to return all those money that they have been taking in order to hold on to your trade from being liquidated. And at a time, you will also make profit on the trade. But if unluckily, this same trade goes totally bad, down to the level of exhausting your remaining $900 balance, and this trade gets liquidated, automatically you have lost all your balances. Remember that you only place trade with $100, but because you use cross margin, you are going to forfeit all your balance of $900 if this trade goes totally bad and all the $900 gets finished. You are going to be liquidated and you will lose all your $900, making $1,000. Why isolated margin mode? A type of margin assigned to a position is restricted to a certain amount. This type of margin is restricted to a certain amount if you use $100 to place a trade and that $100 goes bad. You can only lose that $100 because you have not given them power to touch your remaining position. If the margin falls below the maintenance margin level, which is the liquidation price, the position is liquidated. However, you can add and remove margin at will under this method. You can only add and remove margin at will under this method. But on cross margin, you cannot remove at will because you have given them access. You have given them authority to have access to your remaining balance. So they are going to be taking it automatically until the money gets finished. And whenever the money gets finished and the trade goes below the maintenance level, which is the liquidation price, you are going to get liquidated and you use all your money. Why in isolated is not like that? Hello?
Yes, sir.
Any question before we move ahead?
Yes, sir. I wanted to ask if this is also same at on the KuCoin app.
When we get to KuCoin, we will know. But they are all the same thing. Okay.
Okay, sir.
Now, perfect. Now we have leverages. What are leverages in future trading? In future markets? Leverages are or can be defined as a collateral, holding your position as a loan in a future market. What do I mean? What I meant here is this. For example, you go to your local bank and you want to get a loan, and they ask you to come with your house as a collateral, or any of your company share as a collateral, or any of your landed property as a collateral. Of course, however, if you lose or you fail to return this loan at the stipulated period of time, automatically your local bank is going to seize your properties. The same way it is here in future trading. If you are coming to the market with $10, you are entitled to leverages, and these leverages stand like loans. You can call them loans. You are being given loans. While your total money bringing to the market will serve as collateral. So if you are coming to the market with $10 and you want to use X5 to trade, automatically what you will be given as a power to trade will be $50. Not $50 as a money, but $50 worth of that asset that you want to trade. Are you following? The
Yes,
same
sir.
thing, if you are trading with 10 leverage, automatically you are being given a power of 10 times of your capital. Take, for example, you are coming to the market with $10 to trade, and you select X10 as a leverage. Automatically, you are being given $10 multiplied by 10, which is $100 worth of that asset that you want to trade. Remember, they are going to hold on to your $10 as a collateral. Who is this? Please mute yourself. Thank you, please. Thank you. Mute yourself, please. So, if then you win this trade, your collateral is going to be released to you, and the profit on it will be multiplied by your leverage capacity, which is times 10, and be given back to you. And the same thing, if you lose this trade, your money held down as a collateral is going to be taken, and no profits will be assigned to you. That is what it is on leverage. So I hope you understand my explanation.
No, sir. Not really understood.
So what don't you understand?
From this leverage, are you? I did not really see where the option from the leverage came from.
Okay, you didn't see where the option. This is it here. Can you see my cursor? See my cursor. Can you see it?
Yes, sir.
From here.
Okay, from the trade.
Yeah, from the trade portal. Just tap here. You can adjust your leverage.
Okay, so I wanted for when adjusting the leverage, do you
Yeah.
adjust it according to the from where your signal from from where you are getting your signals, do they always give you the leverage? Like if you adjust it to times 10 or times 20 or times what?
Yeah, we do give leverage. I'm sorry. Sometimes we give leverage, sometimes we don't give. But in our community, we advise that you should never over leverage yourself. Like the most recommended leverage is maximum of 10 and minimum of 3. Maximum of 10 and minimum of 3 or 5. Well, some people love to use 15, 10, 20, 25. In fact, some people use 50, but it's not advisable. As a beginner, you should not even go more than 8, a maximum of 10. But 3, 5, 8 is far, far good and preferable. So now we want to start placing trade. Now in future trade, we have what we call TP and SL. TP simply means take profits. SL simply means stop loss. You can adjust your TP and you can adjust your stop loss. Now, this is it. I want to trade GMT. GMT. Don't forget, in future trade, we also have what we call limit order and market order. We have stop limit, we have stop market, we have trailing stop. So now you want to trade GMT. And in future trade, you can trade with any amount. You can trade with even $1. You can trade with $2. You can even trade with 50 cents. Unlike spot trade that the minimum you can use to trade, that on Binance spot trade is just $10. Now you want to commit $5 to this trade, to GMT, and I want my GMT. I want to set it at limit order. I want to set my GMT to 2.4. The market order is 2.44. I want to set 2.447. I want to set it to 2.4042. And I want to use 10 leverage. 10. I'll just set confirm. Now, I have set my leverage. I have set my market, my price limits. Now, I want to set the amount that I want to use in making trades. I'm setting it up. You can see the way I'm dragging it. I'm dragging it. I'm dragging it until it gets to $5. Yeah, this is $5, 5.13. I can equally type it here. You can equally type it here. Maybe 52 GMT. I want to trade. So I will 2.35. So whenever GMC goes back to 2.35, this order is going to stop automatically, and I will lose little fraction of my money. So I'll just click on buy. It will bring out this question symbol GMT/USDT perpetual. Perpetual means long. Price 2.442. That is the area I want my GMT order to be executed. Amount 52 USDT. Remember that I tell you I am coming to this market with 5.3 5.13 USDT. So 5.13 USDT, and I'm using 10 leverage, 10x leverage. So 5.13, which is approximately 5.2, multiplied by 10, that is 52 USDT. So they are giving me 52 USDT to make trade, but what I am depositing as a collateral here is 5.13 USDT, which is approximately 5.2 USDT. So 5.2 multiplied by 10 leverage, that is 52 USDT that they are giving me to place my trade. I will confirm. So my order has actually appeared here. So whenever the price of GMT goes down to 2.442, this order is going to be executed automatically, as you can see here. And I set, this is my limit buy. So whenever the price of GMT goes to 2.442, this my order is going to peak automatically. And I set my take profit. You can see pending. So whenever the amount of GMT goes to 2.5, which is the price I set as my take profit, this order is going to sell. And this is my stop market, which is stop loss. Whenever the price of GMT goes to 2.35, this order is going to stop. And I'll have myself losing some fraction of my money instead of being liquidated. So this is the benefit of stop loss and take profit. Take profit helps you to secure your profit whenever you are not around in the market. Maybe you set a market and you drop your phone, or you get busy in the kitchen, or you get busy in the office, or you get busy on steering, maybe you are driving. So having set your take profits, whenever the market gets to your limit order to take profit, the market is going to sell automatically and take profits for you. And if market also goes bad, whenever it goes bad to your stop loss price, the market is still going to stop the market, stop your trade for you, whereby securing part of your capital. So the usefulness of stock market is to secure your capital from being lost, like from losing your capital, the total of your capital. Let's say, for example, as I have used $5 to place trade, and I set my stop limit order, stop market order at 2.35. Automatically, if this trade goes bad, my market might stop at $3 or $2 or $1.5. So instead of me to lose my total capital of $5.2 that I come into the market with, I am going to lose part of the money while having part of the money remaining. Hello.
Yes, sir.
Any question?
Mm. Yes, sir.
Are you getting it? Please ask your question.
From this point, I did not really understand where you, because you said you placed your order at was it 2.5 US dollars? But when placing the amount like that, how much balance do you actually have?
I was having $10 here. Look at it. I was having it. And after placing my order using $5.2, so my balance here is $5.5. This order is yet to be executed because I use limit order. Now,
we can place another order. Let me still use limit order, but at a very closer range to the market order. So I want to place another order at 2.446, 2.4546, and I want to use $5. Let's say 50, 51, 52. I want to use $5. Let me use 5, 6. You can see, place order. I want this order to get executed. Tony, you can ask your question. Toby, you can ask your question, please. Toby, you can ask your question. Let me unmute you.
Can you hear me?
Yeah, I can hear you. Can ask your question.
Okay, this is my question. I did a BTC/USBT today, and I tried stopping my. Can you hear me?
I can hear you. Go ahead.
And I tried stopping my profit and loss. One space to write between the I had only one place to write between the profit and the loss. So it's more like I must either take a profit or stop loss. It wasn't GMT.
It was BTC. I understand. They are
So
all
now,
the same thing.
Okay.
This is BTC, yeah.
Yeah, when I did that BTC, my stop lost and taking profit wasn't giving me same thing you showed now. GMTC. So I want to know if there is either I take loss there or I stop. Okay, is either I take profit or I stop loss. There wasn't two options like this. I want to know why and the differences.
There is option. You are not seeing it. Even as your trade is running now, you can still set your stop loss and your take profit. As your trade is running down, you can still set your stop loss and your take profit. When trading on your trading portal, look down, just look down. You will see one small circle. Look at it here. With a mark, just tap it. Once you tap it, two columns.
I'm not seeing the circle. I'm not seeing the circle.
Can you see my screen? But are you seeing my screen?
Yes, yes.
Okay. See, that is it. This is it here. Can you see my hand? Can you see my cursor?
The position one, right?
Yeah. See, you see TP/SL. TP/SL. Under this line. TP/SL. You just tap it. Once you tap it, two columns is going to appear beneath them. Then you can set your take profit. This was my last take profit and my last stop loss. And you can also you could also do that after your trade is being executed. You just come here. You see, this was the trade I placed. I'm on profit already.
I'm on 3.48% profit already, and 17 cents as my profit because I use lower margin. I use a small margin, which is more money. You can see this was my market price. I entered this market at 2.467. Why the current market, and I entered this market at, this is my entering price, 2.456. That was my entry price, and the market is currently at 2.465. So automatically I am making profits. So now, let's say I did not set my take profit and my stop loss. I can still come here and set it. You can see adjust leverage, stop profit and loss, close position. So I can just click on stop profit and loss. It will bring me here. TP/SL. I can set my TP/SL.
Hold on. Let me get this place clear. I'm not, yeah. This is where my problem is. Exactly here.
Open your Binance as you are talking. Open your Binance.
Okay.
If you open your Binance, you will see your trade illustration.
Okay, at the future.
Yeah. Have you closed the trade you showed me?
Not at all.
Okay, so
I think I'm
on your trade history, you are going to see adjust leverage, stop profit and loss, close position. This adjust leverage simply means that you can readjust your leverage. Maybe
at the close and
maybe the leverage you choose is too small. You can decide to increase it. You see, you can either decide to increase it or reduce it. For example, my leverage was 10. I can decide to decrease it to 7 or 5. And this can only be done on isolated margin. You cannot adjust leverage on cross margin. So now I can increase my leverage to 50. Confirm. I have increased this leverage to 50. You can see that my percentage has changed immediately to 21% because it is actually on a very high leverage. And the more your leverage, the more chances you are likely to lose. The more your leverage, the more chances you are likely to lose. And the more your leverage, the more chances you are likely to lose. And the more chances you are likely to make profit, bigger profits. The more chances you are likely to make bigger profits. The lower your leverage, the more chances you are likely to be secured from being liquidated. And the lower your leverage also, the lower chances of your profit. Why? The more your leverage, the more chances of making bigger profits and the more chances of losing. Do you understand? So the next one is stop profit and loss, which is your TP and your SL. Your TP and your SL. Toby, can you see it now?
Yes, I'm seeing it, but I'm not. I want to know where exactly to set TP.
Just tap it. Just tap your stop profit and loss. As you're seeing it, just click on it. Just click on it.
They give me one option, only one option. This is what I have. They're giving me only one option. I want to know if I can set my stop loss.
The second option is there. The second option is beside it. Just look up. Look at the subheading. You will see position TP/SL. Just tap it.
Okay.
Have you seen it? So this is your take profit and this is your stop loss. You can set your take profit, and as you're setting it, you'll be seeing the general amount that you could earn. I will just put 2.5. So if I set to take profit at 2.5, I'm going to make profit of 0.9 USDT. Then if I set it to 3.5, I'm going to make profit of $21 using $5. Then my stop loss, I can put 2.1, which is -7. Then I can put 2.3, which I'm going to lose 3.27.
I'm better now. I think I understand it better now.
Okay, good. Then the next one
Better now.
closer to it. The next one close to it is close position. So this close position simply means that you can close your position at once. Maybe you just come in, you say you've already set your stop loss and your take profit, but you come in and you see a profit that has actually fed your appetite. Maybe you set to take profit at 50% or 100%, but you come in, you've already seen 30% and you are good enough with the 30%, you can just close your position directly. Like, can do this position close 100% close position. I have closed this position now. So this is my profit. John, look at the profit I've made. I've closed this. So I did not wait. I did not wait for my take profits. Neither did I wait for my loss. All right. That I set here and the take profit that I set, you can see them all here. They're still open here because I have closed the trade against them. Joshua, you're making noise. So, Toby, you can then lower your hand. So, do you all understand this?
Yes, sir.
Okay. Perfect. Now, there are some things that you also need to understand here. There are some things that you also need to understand here, but you might not really understand them now. They are little skills and tricks that I use in trading personally. There are some things you do that I call adjusting capital and adjusting profit. Let's say, for example, you are given a trade. You are given BTC signal at at 36,100. Or 36,000. $50, and you place the trade. And you have like $10 to place the trade. So you can come here now, you set this order at 36,000. Or you have $100 to place the trade, and you are given a trade call signal at $36,050. You can come here, you place the trade at $36,050. You use $10. You place another trade at $36,000. You use $10. You use $20. No, you at first one you use $20, second one you use $10. You can come again, play the same trade as $35,950. You use $10. So if peradventure this trade goes bad and goes to $36,000 and your first entry was $36,050, you already have another trade set up there that is going to peak. So it will reduce your risk level. If you were having your risk level at 9%, your risk level will automatically change to 8%. And your entry level is going to reduce as well from $36,050 to around $36,047. And if that same trade then comes up again to your first entry level, which was $36,050, automatically you are at profit. So you can then decide to take part of the profit in order to adjust your capital. Am I communicating?
Yes, sir.
So these are tricks and these are skills that you use in trading futures. There are also many others, but I think I might be giving you that when we are going to use KuCoin tomorrow, because it's already late. Our South African people should be in their 11 now, should be around 10:54 now, so which is quite late. I would like to take your question now, if there is any at all. And if there is no question, let us all get our binaries tomorrow as an assignment. I will give you a trade call now that you are going to trade. I will give you a trade call that you are going to trade. You are going to trade. Let me give you a trade call that is very, very cheaper. You are going to trade Shiba. You are going to trade Shiba against USDT. Your entry price, please take your pen, take your pen. Your entry price is 0.2. Your entry price is 0.199 1,000 Shiba. 0.199 to 0.2000. That is your entry price. And your take profit price is 0.201. First target. Second target, 0.2003. Your second target, 0.021. Your first target, 0.0215. Then your last target, 0.022. Your leverage should not be more than 10. Your leverage should not be more than 8. You should take leverage from 5 or 3 to 8. Thank you all. Please place this trade and do the screenshots and send to me, whether being executed or not being executed. If your trade is being executed, send it to me. If it's not yet to be executed, send it to me. Thank you all. Please, I'll be expecting your assignments, and you should submit your assignments before.
Can you also post the assignment in the group?
You should submit your assignments before 12 p.m. tomorrow. Before 12 p.m. tomorrow, for those who can use finance.
The entering point and all that you can use any amount, right?
Then your stop loss should be 0.0195. 0.0195 or 0.01965. 0.01965 should be your stop loss.
Can you post this in the group, please?
I will do that.
Thank you.
You're welcome. So
Sorry, I was
night,
having
everyone.
sorry, I was having load shedding. Was this recorded?
Yes,
It
now
was
it's
recorded.
I'm just coming in. I've lost. I'm so sorry.
No, it's recorded.
You're welcome. It was recorded.
Yeah, so I'll listen to it. Then maybe I'll do the assignment.
Okay, thank you. You have
Thank
to,
you.
please. Yeah.
No, I'll do it.
Thank you, everyone. Do have a wonderful night. Go back to what you have been taught. Practice, 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 practice. Ask question, ask question, ask question. I am always here to assist you.
Can I ask you one question whilst you're on it?
You can go ahead, ma.
I've got one trade that I messed up and it's playing yo-yo on me. What happened is I did the trade. It was features. It was times 10. Then when I noticed it was going to hit my stop loss, I took off my stop loss and I added margin. So it's just going up and down, up and down. It's not liquidating me unless there's a big fundamental, I think. But as long as there isn't, now I've been holding it for 10 days. When it's about to come to my buying, to give me profit, at times it will end at 20. Because for me to take my profit, I put it on $21. It's on Atom because I bought it high, I bought it at 20. But now, like yesterday, it was about to come to 21. Then at 20, Bitcoin did its game and it has come down again to 75%.
So what is your risk level?
Sorry. That's what I'm asking you, that as long as I'm adding margin and I don't have a stop loss, it's just playing there. Nothing is happening unless if you've got a very big fundamental.
So see what you are going to do. Look at your risk level, 1, 2. Look at your losing percentage. Then let me know what it is.
Yeah, the losing percentage is just ending at 18%. It's not 18%. Going high. Yeah.
Okay, you can leave it. Don't worry, the trade is going to bounce back.
Because yesterday it almost bounced back, and then Bitcoin did its thing. Then it started going down again.
It's going to come up. If this trade goes to like 50% losses, you can add up little thing on it. Are you on cross or isolated?
No, I'm on isolated, and the last time I saw it was going high, I just added the margin. So like now the trade was for $100 and I've added margin I added $58.
Okay, it's now total of 158.
Yes.
It's going to go well. Whenever you see little profits, you can close the trade.
Okay, thank you, sir.
After this class, I'm actually preparing something. And this current session is going to enjoy it. I'm preparing a 5% and 10% daily trade.
That's what I'm looking for myself.
5%. You must not go beyond 5%. You must not go beyond 10%. And it's going to be a recompounding trade. So whenever your trade gets to 5%, 10%, you close it. You wait for another trade.
That's like what I would love.
We can be because able, I was asking. We might be able to be taking up to 5 trades in a day. So 5 trades multiplied by 5%, that's 25% profit in a day. And we will run it for like 10 days. That's 250% profit. And we close,
you are very right.
Afresh.
You are
So,
very right. I was looking at it that day, that if you have got, let's say $1,000, I'm just trying to, for the sake of maths, if you've got $1,000 and you make 10% per day, that's $100. And in 25 days, which is working days, you've got $2,500,
all right, it's
which is
okay.
quite.
Which is quite enticing and quite great.
Okay. I look forward to enjoying this with you.
I think I have a question on.
All right,
God
it's
bless
okay.
you.
Do
Good
have a
night.
wonderful night, everyone. I need to go and rest now. Thank you,
Both
thank
of
you,
us.
thank you.
Same you. Bye bye, bye bye.
Study. Ask question, ask question, ask question.
I have
We
a question.
will.